All right, so in today's video, we're going to be going over the crypto market. We're going to go over Bitcoin specifically. We're going to take over macro and then go into the technical analysis of where Bitcoin's heading, what sort of actionable plans we can take, and really going over what really matters right now in the context of where price is. So there's no better place to start with macro, okay? So obviously with macro, we're going to go over the main things, and I'm not going to go over everything today, but if you do want to see very in-depth macro analysis from myself, well, not necessarily myself, but from the team, you can see that here. And I will link the playlist down below, which we go over every single month for Bitcoin price action and how the macro environment ties into that, okay? So every single month we do an update. You can see here, it's just the blue one called Beyond the Block, if you're really interested in that macro for more in-depth. But what we're going to go over now is we're just going to quickly have a look at where we sit in the macro liquidity cycle and macro cycle here. So right now we are just over the 50% threshold line. So it's showing that things are starting to get a little bit more heated up. We've had a really slow start coming into this. You can see here the low was in around November 22nd. Since then, the Bitcoin low was in around that time. And since then, obviously, Bitcoin has done a multiplier of around, I think it's 6x, which is significant in terms of growing wealth and just crypto and like Bitcoin in general. I mean, when you really think about it. So where do we sit? We sit riding over here. We've been very much in a consolidated period. It hasn't been like the COVID situation where we saw insane amounts of money and liquidity injection, which really sped up that liquidity cycle, and obviously different things like inflation and all these metrics, which tie into this metric specifically. So we haven't seen that this cycle. It's been much more different, and even the way Bitcoin's been trading has been very, very different. Okay. So another one I'll look at here is just a more macro signal take. So we've had some false alarm signals which we've actually ignored, and the reason is because our liquidity cycle hasn't been where we think is not where we think it's going to be. Sorry, I'll reword that. The liquidity cycle has not topped yet under our analysis. We believe we're going to be going higher. So until then, we truly think Bitcoin's going high, and the reason is the correlation rate it's unprecedented and it's really high. And to sit there and ignore the data that's no strategy. So you need to be obviously looking at the data. It's very important. So yeah, there was a false alarm here. A lot of people were freaking out in the general crypto space, CT. And obviously we since had that pump up, that rise. And also down here, there was significant fears in the market. People were thinking we took out the high and that was it. So yeah, I mean, throughout the whole entire run, there's been wars too, all these different types of things happening. And I guess the same thing, the key is what matters, right? The government's going to be, there's money being made, money being printed, liquidity is coming into the system, correlation rates are high, and money has to be parked somewhere. Do people want to put it in the US dollar? Do they want to put it in, where do they want to put it? So there's really only a few baskets that I think these days are good and offer some good returns, especially for the younger youth, where a lot of the people my age, in their 20s are sort of priced out of property and those sort of assets, where they're more inclined to purchase something that they can actually hold, rather than property which they can't actually physically get because it's too expensive and you're taking huge amounts of debt, XYZ. It sort of leads into this idea that gold is like Bitcoin is the new gold for the youth, I guess you could say, which I think is what's actually happening. And I think that's what the institutional investors are looking at it and doing the long run. It's going to be that sort of hedge against inflation, hedge against all that sort of stuff. Anyway, along with that, the global liquidity cycle, and this is where we stand in it, we had that low coming with the US regional banking crisis, which was the Silicon Valley Bank, and a few others that had some issues. Since then, we've had that rebound up with our liquidity. It hasn't been a very hard push like COVID, which was, you can see the angle was much more extreme. But nonetheless, we've obviously had some decent liquidity come in the system. The chart I want to highlight here, which really is important. Oh, this one's just another one, the ISM. It's good to get a gauge on where the manufacturing sits in the US. So you can see there, it's been very stagnant. There hasn't been much movement. So nothing like the previous cycle where things accelerated very, very fast. So And then inflation. But yeah, the chart I want to go to and highlight is these two here. So the rate of change in the global liquidity shows that we are going up in the rate of change. So obviously liquidity is increasing. And then obviously here is our weekly take on the market, tying in with global liquidity. So yeah, right now we've had a few bit of consolidative periods, which as you can see here, which is also reflected where price is doing right now too, so chopping in and out, which is to be expected. We had this phase here when you had a very large disconnect with Bitcoin and global liquidity. So global liquidity was going up very fast, Bitcoin was going down here, and we call it the alligator jaw. So what's happening here is there is a disconnect between where the global liquidity is heading and Bitcoin, and what that usually means is they're going to intertwine sooner or later, and that obviously did happen, and that's why I was really bullish and the team was very bullish. The team, as in when we do these videos for Ainsley, you can see here that there's also technical reasons as to why I was very bullish, but regardless of that, the global liquidity was the main driving factor behind why I was thinking what I was thinking. Couple that in with what I was also seeing from sentiment, all these different types of things which matter a lot. Other than that, I think that's pretty much all there is. If you want to check this out, you can go check these resources out in those videos. I'll give you all the links listed down in the description below for any of those who are curious. What I'm going to go to next is I just saw this too regarding Glassnode. It said there's apparently a lot of whales accumulating Ethereum right now. So what does that mean? You can't put anything necessarily on it, but it does seem promising that Ethereum was probably going to have a decent sized pump. Bitcoin has a pump too. So yeah, you can check that one out. I think that's quite bullish for the alts. Bitcoin Hyper, he's been talking about some levels here. So we can see his levels here around 105, 104. You got a VWAP. You've got some Fibonacci extensions there too. And then obviously there's been large liquidity levels above us. You can see there 110-ish. One thing I want to go over too is the MVRVZ score. So what we've seen in previous cycles is a much more exuberant rush up and a very heavy decline. This cycle, we're not seeing that. We're seeing a much more staircase-like characteristic from the price action and also the MVRV ratio, which is to be expected because if you're accelerating at a faster speed, you're going to obviously have a larger disconnect with the realized price and market cap. We're just not seeing that right now. We're seeing a very steady push up, which means a lot of transactions are taking place, which means to me the floor is being created higher with less speed, which is actually very bullish, especially for where we're sitting with the global liquidity, with the sentiment, with the funding rates, with all the things that matter for the next push up. Anyway, this metric's really one that can be looked at as a guide to is there mass euphoria in the market, which we cannot convincingly say there is at all. I would say, I'd be more inclined to say there's literally no euphoria. The closest we probably came was probably that ETF phase around here, which then had a subsequent trading sideways. I was expecting it to go higher in terms of the ratio, but obviously when you adjust new data, you have to be sympathetic to that and be able to pivot, which I have pivoted. Nonetheless, the thesis has remained the same. This that we've gotten there hasn't been the way I would have thought. It's probably been a bit more institutionalized in terms of how it's moved and also how many institutions have actually got onto this and the ETF flows and all that sort of stuff that actually has more longer term holding rather than these short term traders which can spike price up, which is what you saw here. Very, very short term, instant downtrends, 80% bear markets, that sort of stuff. That's looking a lot less likely now. Just depends how much leverage in the market, obviously, but yeah, right now I'm rather not really seeing that in the market. What I want to check is the funding rates, which are very important. And the funding rates show you, is the market positioned one way or another to an extreme? So if it's the long side, meaning there's a lot of people long in the market, you're going to see these funding rates really high. So clusters like this, and like that signal that that is what's happening. So they also generally mark tops locally. So you could see there was ETF top here. You had the top here, which is accompanied with that 7-month trading sideways range. You then also had the very high funding rates going into this Trump era, I guess section I want to call it. And then right now we've sort of petered off. and that can be seen with the red and green relationship. So when you're really heavy into the positive side, you're not going to see a lot of red. So it means a lot of people are long. The longs are paying the shorts to be in those positions, because if the market's really one-sided, the perpetual market needs to stabilize to the spot market. So you're going to have those moments where they're very disconnected. So to really equilibrium, put that in the equilibrium, put it where it should be, which the prices should be very similar, you're going to have to make these funding rates and adjust them. And it's all computerized, it's done by the exchanges, but it's a signal to let us know market positioning. So we can see that here too in the bear market down here in the last push lower during that FTX crash. We had a large amount of shorts in the market, which is also a signal that the bottom was probably going to come in, which it was during that point. So to me, this is looking very, very healthy. It doesn't look toppy at all to me, especially when you factor in global macro, liquidity cycles, where we're sitting, funding rates, MBRV, and all those different types of things. I would class this as the wall of worry. Now, a lot of people are worried, and I think that based on everything I've seen in markets throughout my 3 or 4 years, I would say this is the wall of worry, and I think we're going to be going higher based on all the metrics I'm currently viewing. Now, how high? I'm not going to sit and determine how high, but rather I'm going to be looking at the metrics and seeing where's global liquidity sitting, what are our technical levels looking at, and we're going to be doing technical analysis in a second. But yeah, this looks very healthy. I just want to say, interim chop doesn't matter in the long term, okay? Anyway, what we're going to do now is we're going to go take a look at where we're sitting with Bitcoin. So I'm going to go over the key levels technically and sort of give you a good gauge on what I'm viewing in the market. So going to the monthly, we can see we are pretty convincingly in a bull market here. It's been up the whole time pretty much, hasn't it? We have had big ranges of trading sideways, and you can see that here and here. And then right now we're in that push up. Excuse me. So moving to the daily, what I'm going to be looking at is volume. Volume is one of the key things I think that's very important. So this volume profile pull is taking this entire range. Now what we're going to see here is we're trading just above or just on the value area high of the range. So if we can convincingly start to trade above here, close above, form some bullish divergences, I think the next leg is very, very likely to occur, okay? Now this is obviously, there's two situations with trading. There's always going to be the bearish side and the bullish side. It's just what's more likely. And right now I'm leaning towards that. If we break above this, we're very, very bullish. So you can see we're teetering around with this price mark. It's also this resistance level here from these previous highs. If we start to close above that, then expect to see these levels come back again. But closing above will be very bullish. I think realistically, we're probably going to see something like this, and we're going to have to see how that turns out. But regardless of the matter, predicting short term really doesn't matter. And I want to highlight that because you'll get chopped out of the market because there'll be a time where you're wrong with when you do a trading setup and all these sorts of things, right? And when I ran the figures, you're better off just buying spot positions and just keep buying and DCAing the market, and trying to time the full year cycles based off liquidity, not just the full year cycle itself. Because there's going to be times where you're wrong, because each market context is different. There could be a tweet that comes out, there could be a war event that comes out. That's obviously going to delude your analysis and make it less credible because of external factors that influence the market, which they do, whether people believe or not. But that's just the case, and that's just the way it is. I don't want to see this level get lost, which is the market structure level from here. It's also a key pivotal point if you just highlight from here. So resistance, support, resistance, support, flip to resistance. If you send that out here, that's a key level. I don't want to see that lost. I think that if that gets lost, it's very bearish. So fingers crossed we don't lose that. I'm not expecting it to get lost. That being said, I will adjust to what data presents. You can see we're in a range here. Some people will call, traditionally it's called a bull flag. But regardless of the fact, patterns aren't really important to what I'm looking at right now. I just think we've tapped into a very key support, which you can also see here with this VWAP, which is the volume weighted average. We'll take it from this pull because that's the pull that it's actually meant to be done on. Yeah, we took into a very key level of support, as you can see, market structure level, plus volume weighted average. Now, if we just take a look at the fixed range for this entire run up, we've got some key levels here, so which is one down here, but it doesn't have to hit those levels. We sort of bounce off this volume node, okay? And where we're looking at right now for this little mini range, like I said, we don't want to lose around this level to this level because that means more downside in my eyes. Yes, we could have a swing play pattern of that low, but the chances of that happening, considering we've broken the key market structure level, are quite low. We'd have to have a very fast rebound for me to be convinced that we're going to go higher if that happened. Locally is what I'm talking about. Long term, I'm obviously a bull, but locally, okay? So other than that, I think that's all that really matters. In terms of looking for actual trades, what I would be looking at is one of the trades down here. There's also, if you want to, there's a fair value gap down here, which you could be potentially looking at. Ties in with the volume node, which is down here. Probably ties in with around a Fibonacci level, 0.5 discount zone. So potentially in here's a good trade setup. Just have to accompany that with a few different metrics to get a good idea on how that turns out. Another one would be the swing play pattern of this high, which would be a scalp trade. So it would look something like this if it were to happen. That assumes we get a rejection from that. Also here you have these levels here, which you get, but usually if you trigger one, you're going to trigger the rest. Very sketchy trade to take in a bull market. That's why I prefer not to. Yeah, but certainly this level is probably my most important level. If we do creep lower, there are some support levels here, potentially for a double bottom. Either way, you know, my expectations are we will be seeing higher. The daily cycles, obviously we have seen, it's very tricky to draw where it's going to land yet. It's probably this one here, but we're going to have to see how it turns out. You'd be expecting to see a daily cycle turn up soon for the next push up. So we're going to have to see. Either way, when you know what you believe in long term, it's a lot easier to sit back and relax. And I think the problem with all these traders is, well, especially because I've done a lot of trading, I know how the market, sort of the mechanics of the market work. And when you do a lot of it and you understand how it actually works, you realize that, yes, you can be right a lot of the time, but there's so many more things that go into risk management, trade position sizing, all these different things. And it's just better off not even doing it. You're better off just buying and believing in what you're purchasing, having a long-term bias, and also coming up with macro analysis, which is important. And the swing trades, what I think most of you guys should be doing, because if you want to be an actual trader, you have to be sitting and looking at things 24/7, seeing order flow. And I've done that. I've been in the trenches for years and I understand how that all works. Order flow, CVD, all these different types of things. Swing trading is probably going to be your best bet if you're trying to be a trader still. Levels like this, levels like this, levels like this were all easy and callable, which is what I was doing in those videos, which you can go and cite. And yeah, I think that's really, honestly, that's about it, really. So what am I expecting? I'm expecting a little bit of chop, but nonetheless, going into this, I'm expecting higher prices to come. Other than that, guys, I think I've pretty much laid everything out. I will adjust new data when it represents, but more or less, I think the key is very, very, well, the key's been stated and what I've said. If anyone disagrees, feel free to comment. I will answer comments as long as they're constructive. If it's just something else, then I'm not going to answer it. But yeah, other than that, guys, I'll have a good one and I'll update for the next update later.